And since the creation of the club in 2006, more than 50 events have been organized, and this is the second time this year. There used to be physical meetings, but maybe this is the first time that I will say this. Thanks to the COVID-19, we are experimenting digital conferences, which certainly allow to broaden our audience. Last but not least, we are engaged on a personal level. So when dealing with the activity of the club, we are not representing the organization we work for. I will take the opportunity now maybe to launch a first survey, just to get to know you a little bit more. So you should now see a survey on your screen. So please take a second to answer. We just want to know who you are, what type of project, whether it's the first time or not that you attend one of our conferences. So I'm going to leave another few seconds. Still moving, people still answering. Okay, I think we're done. Oh, nope. Okay. Thank you very much. So a majority of first comers, let's say, but some recidivists, so to say, people with more than 2 participations. And we have a majority of people involved in the microfinance sector, both coming from MFIs and others from the investment vehicles. Thank you very much for this. Okay, and I shall move to the next one. So just some very brief reminders. Of course, during the speaker's intervention, please mute your mic to avoid any issue. The conference will last 1 hour and a half. The agenda is basically to dedicate 1 hour to the interventions of our 3 speakers, which I will introduce right after. And we will then have about half an hour in order to answer your questions and leave the floor again to our speakers so that they can answer your questions or doubts or clarify one of the items that they may have presented. Feel free to ask your questions in the chat. You have a button that you can press and leave your comments and questions, and we will then process them and try to answer them as much as we can. And last but not least, also the webinar will be recorded, so you will receive by email a recording of the webinar if you want to review it. So my name is Adrian. I work, well, I will be the facilitator today. As a moderator, we have Priscilla Carpenter, who will support me and help me with the treatment of the questions and moderate the debate after the presentation of our 3 panelists. We will first start with Maxime Borgogno from the Fondation Grameen Crédit Agricole. is an investment officer and has been involved in a study that of which he will share the main results. And he will be our first speaker. We then have Luzim Sadrija, I hope I pronounce it well, the historical CEO of KRK, a microfinance institution from Kosovo. And finally, Disan Katabalwa, who is the head of digital strategy of Ugafode, another microfinance institution in Uganda. And this would be the order of their presentation. Okay, now it's time for our second survey, which is, don't worry, there is no trick. It's just a way also of introducing Maxime's presentation. So you should again see on your screen 2 questions. Based on latest studies, how many MFIs expect growth of their portfolio in 2021? You have there 3 options that you can pick. And second question, what was the strongest financial impact on the MFIs during the crisis? Was it an increase of portfolio at risk, a decrease of outstanding loan portfolio, or the absence of interest loan payments from the customers due to, of course, as you may know, moratorium reschedulement of loans that our 3 panelists will mention in their presentation. Okay, almost there. 72% of participation. Okay, I will close the vote now in more than 1 minute. Wow. I just need to say this, and there are 5 or 6 more answers. Okay, let's close it. Up, you should now see the results. So 50% say, 40% say 50% of the votes, 50% of the MFIs expect to have a growth of their portfolio. Okay, and the majority consider that the strongest financial impact was on MFI's portfolio at risk. I will not answer this right now and take advantage of Maxime's presence to answer these throughout his presentation. So I leave the floor to you, Maxime. And I think, yeah, exactly. You should unmute your mic.
Yes, it's okay.
Welcome, Maxime. The floor is yours. You have 20 minutes.
Thanks, Adrien, for the introduction. Hi, everyone. So, as Adrien mentioned, I worked at the Grameen Crédit Agricole Foundation. Just a quick presentation. We are an MFI, microfinance and social business investors. And on the microfinance side, we invest mostly through senior debt in MFIs located in Asia, Europe, and Africa. That's pretty much it for the presentation. I'm going to talk to you today quickly about how, as microfinance investors, we perceive the crisis, the reaction of the industry so far, and we will take a quick look at the challenges ahead. Thank you for the slide, Adrien. So the first point that I want to mention when talking about investors in microfinance in the COVID-19 crisis is how investors reacted. And the first key factor in the crisis management was the high level of coordination among microfinance investors. In practice, it led to several initiatives that were complementary and all supported the sector. For instance, at the foundation level, we launched a pledge initiative, which was endorsed by 30 microfinance stakeholders. It was basically a commitment to the best practices and a responsible approach for MFIs, their clients, and their staff in the COVID-19 period, as we didn't know what could happen in the near future at the time. Other initiatives include also a MOU by it was written by some of the largest microfinance investors. Its purpose was to coordinate practically the rollover of debts for MFIs. I will come back to this later and deepen the subject. And the last thing we can mention regarding coordination of investors in the industry is the common reporting format that was launched. It was a very simple document that could allow all types of microfinance institutions to do a regular and easy reporting to its lenders. Now, that being said, the question is how these commitments and this initiative materialize on the job of microfinance investors. What happened concretely for us is that there were an increase of the communication between investors and MFI. At the foundation level, we did that through investment officers, which was mainly the same for other investors. This regular communication had been set up first to obtain information on how the company faced the crisis, but also what was going on in the country and was the reaction adequate. And all lenders and MFIs regularly met during what we call lenders call, and we discussed the situation of the company, but also we held long discussion regarding the debt rollovers if they were needed for the MFIs. Last thing to mention in our job was the fact that there were some technical assistant missions that were coordinated in order to implement quickly business continuity measures for MFIs which needed one. And on this slide, the last thing that I want to mention at the foundation level is the fact that we launched early in March 2020 a survey initiative whose main purpose was to gather early MFI impressions, maybe their potential needs, the potential impact of the crisis, and everything that could be felt by an MFI. We started working with 2 other microfinance investors on this survey initiative starting May 2020, ADA and Inpulse. And it allowed us to broaden the scope of the analysis and to reach with the surveys more than 100 MFIs. Each time we analyze the results, we gather them in an article that we will publish on all microfinance publication platforms, but also within all of our microfinance partners. And the figures that you are going to see in the next slides are all coming from these results. And just so you know, all the results of the 2020 surveys will be shared in the coming weeks when we publish a 1-year analysis of all the results we had. We'll be posted about that. We can move on with the next slide. So, as an investor, the first visible conclusion for us from an investor perspective is the fact that a liquidity crisis has been avoided for MFIs. I just mentioned the debt rollovers. In concrete terms, lenders postpone the principal repayment of their loans to MFIs. This was it was a consequence of the regulatory recommended moratoriums, which means MFI offer grace period to their clients. And in this context of moratorium, MFI could not rely on their usual liquidity assumptions. And the deferral of principal repayments by the lender allowed MFIs to maintain a healthy and necessary liquidity level during the period. Just to give you some insights about that, it has been the main job of the foundation in the second quarter of 2020. The payment postponement have been, they took different forms according to each MFI. For instance, the duration could be adapted to their forecast. As you can see on the slide, at the pledge signatories level, the majority of postponements was for 6 months. But there was also 1 year and 2 years, which are 12 and 24 months. Also, according to MFI, we adjust how we would or would not extend the maturity of the loan. And it is to be noted that investors were pretty quick to do so because all the agreements for the postponement of repayments have been signed informally, which means by email in what we call handshake agreements. And what I talked to you about just earlier regarding the commitment to best practices, they were included in those agreements with clauses on the protection of clients. And also, investors try to give as more relief as possible to MFI, and they included, for instance, clauses of non-acceleration in case of a financial covenant breach during the period of the handshake agreement. Just to give you an idea of what it represented, at the foundation level, there were 29 rollovers to handle, and it represented at the time 40% of our debt portfolio, which was important. And just to deepen it one more time, I would add that this also had a consequence on the foundation itself, because some of our lenders also gave us deferral of payments, so some postponement. However, it was in a much lesser extent. Thank you, Adrian. That was it for the liquidity. So once we understood the liquidity, the direct liquidity issue, we also wanted to understand what was the situation for MFIs in operational terms. How was working the microfinance sector? So what we saw at first, and just to recall, the lockdown containment measure have deeply limited the activities of MFI. For instance, the difficulty to move, the difficulty to meet customers on the field, the difficulty to gather with repayment group. It limited the basic MFI's activities, such as disbursing loans or collecting repayments. Currently, we see that the situation remains unstable or unpredictable according to each location, and an MFI can be it can face very quickly a deterioration of constraints and can be limited in its activity again. However, in general, we see that there is a resumption of activities for the majority of MFI since the summer 2020. And what is very interesting for us is we see that this resumption of activities has been done with caution by MFIs, but also with proactivity. Some example quickly, MFIs have adjusted their operating methods. Sometimes it's digital payments or new procedures. They also adapted their forecast for the coming years. And I was talking about caution. We saw that they took additional caution when disbursing loans. For instance, they told us that they would target less impacted activities, they would rely on existing clients only, or they will only select very good risk profile clients. The consequence for this, for us, is the fact that most MFI that we surveyed for the last time in December 2020 expect to go back or to continue to grow in 2021. For us, it's 80%, which respond to the survey question. And in fact, for a year, we've seen that they remain optimistic. And for us, it is based on a very good understanding of the current situation in the country they work, but also on all the experience they gained in 2020. And how does it materialize for us as investors? Well, from July 2020 onward, we started working again on new fundings to MFI, which needs support for 2021, and to work on the growth of their activities. Yes, next slide, please. So these are the encouraging signs that we see currently, but right now we try to keep in mind that the full recovery of economies is not there yet. We are not at pre-crisis level. And we also keep in mind that the resumption of activities for MFIs will also depend on the resumption of a full activity for their clients. And if we see that operations are better for MFIs, we also see that they are not healed on a financial aspect. So just to clarify, you can see on the slide all the financial difficulties that MFIs suffered from for a year now. The first issue was the reduction of the portfolio outstanding, obviously, because if you cannot disburse the loan and if some are repaid, your portfolio outstanding reduces. But we just saw that there's a better trend on this last point. The other things we see now are, for instance, less profitability than before the crisis, maybe equity issues. It can be a decrease of the equity or an equity that doesn't grow fast enough. And in fact, all of these financial consequences depend on the most important impact of the crisis, which has been the same for a year now, is the fact that the credit risk deteriorated for MFIs. You can see it on the top of the left chart. 80% of MFIs face a higher portfolio at risk than before the crisis. In the detail, when we look at the evolution, we see that the poverty of MFI, it peaked in the summer 2020, in the second or the third quarter, but it also started to decrease in the fourth, towards the first quarter level, but still it is not pre-crisis for now. And we have to keep in mind also that this trend hides a lot of disparities. There are several profiles of increased credit risk. There can be only a slight increase from before the crisis, but there can be a credit risk that more than doubled. Consequently, what we see now as a key takeaway out of this is the fact that MFI operate in this context, but in the near future, they will also have to find a balance between prudently managing this risk and continuing to do their activities, which is granting new loans to their clients. Next slide, please. So to conclude on each of the topics that I mentioned before, some questions still arise. In fact, we have information right now about this subject. There are still questions we wonder, and these are the main points that the foundation, but also in working group among investors, are currently focusing on, and we will focus on that in the months to come. On liquidity first, we are in a period where the rollovers are either coming to an end for the 6 months one, or will soon end for the 12 months one. It means that the MFIs that benefited from the debt rollovers will require an adequate liquidity management that will plan the fact that we'll have to start reimbursing the principal of their loans in the coming months. And to us, there's also a question regarding this subject of liquidity, because these MFIs, they will also have to secure new funding to help the growth that they predict. They will have to fill in their pipeline. The question pending for us now is, will they be able to secure all of their pipeline, even if there is a much higher credit risk? And the last question on liquidity, on the other side, for investors, we see that there's a high liquidity among microfinance investors right now. In fact, all of the investors did not disburse much loans in 2020 because we dealt with the rollovers for more than a quarter. And right now we wonder what will be the impact on the pricing of the loans to MFI, and eventually it is on our own financial performance as an investor. So these are all the questions that are pending regarding liquidity for the coming months. On credit risk, sorry, can we just go back? I have like 4 minutes left. Thank you. On credit risk, so we see that there is a higher portfolio at risk for MFIs in general. And we wonder what will be the final impact of this credit risk on the financial statements of MFI. Will they have to make even more provisions? Will they have to write off some loans? And the question that is underlying that is, will there be losses, additional losses because of the credit risk? And what we want to do is to know if there will be losses, but to know also an estimation of how much it will represent. And this leads to the last subject, the last topic that we will focus on in the coming months is the capitalization. If there are losses, we want to know if MFIs will have enough margin to absorb those losses. And if it's not the case, the question then is, will MFIs benefit from support at the capitalization level with fresh new equity? Who will do that? Will it be the current investors, new ones? Will it be national or international investors? This is part of the questions that are pending for the coming months, both from an investor point of view, but also for the MFIs to us. So I guess I'm reaching 20 minutes. Yes, it's all there. These are mainly the subjects that we are following closely at the foundation level and that we will be dealing in the next months, both with internal analysis, but also in the surveys. You will be able to see the results of the surveys in the next articles that we will write after each wave of surveys. But you will also find some of them in the study that will be published in the coming months. So thank you for your attention and your time. And of course, you can ask any question if needed. Thank you.
Thank you so much, Maxime, for this very interesting insight. There are indeed some questions, but we will deal with them at the end. What I can see from your presentation is that the number of participants which have reached more than 50 people are experts, because they were right on both questions that we asked before your intervention, basically on the expected growth of their portfolio of the MFIs, and the PAR being the main negative financial effect of the crisis for the financial service providers. Thank you again. So now we were somewhere in Europe and in Western Europe, and we will move to Kosovo in order to look at what the effect of the crisis 1 year after was on KRK from Kosovo. Lulzim, can you hear me?
Yes, very well.
The floor is yours.
Yes, thanks.
Oh, wait
Adrian.
wait a second, because I'm so excited about hearing what you have to say that I forgot that I also wanted to share with you a small survey before we start. With the same logic as before, sorry, Luzim, to interrupt you. So we have two questions for you that Luzim will answer during his presentation. The votes are open. Between March and June 2020, what is the share of KRK outstanding portfolio under moratorium? And the second one was in 2020, KRK's loan portfolio has grown, although at a lower pace, remained stable or decreased. So let's see if our experts are still right. Okay, almost 50% vote. Okay, let's close it. We have over 50% of participation. Up. And so 63% of you, the majority, 40% considers that 58% of KRK's outstanding portfolio was under moratorium in the period March to June 2020. Okay. And in 2020, KRK's loan portfolio has decreased. That's the majority of the respondents. That's the answer. Fine, Muslim, I'll let you answer, go through your presentation and surely answer these two questions. The floor is yours. Sorry for the interruption before.
Yes, thanks, Adrien. Dear participants, dear panelists and organizers, it's my pleasure to participate in this event and to share with you the experience of KRK during this COVID crisis. Just maybe a short presentation. Who is KRK? KRK is one of MFI of Kosovo. In fact, third largest non-bank financial institution in Kosovo, which with 20% of market share, and is the only MFI operating as LLC. KRK has a good structure of shareholders. The shareholders of KRK are EFSE, FMO, CD, French company, Credit Cooperative, French bank also, and jointly they own 100% of share. It's very important to share with you also that originally the KRK, it was established by the financing of French Agency for Development and the European Commission, and the implementation partner, it was the International. And during this period, or after 3 years of operating as NGO, in 2004, CD jointly with ADI has completed the process of transformation of, at the time, rural finance project to Crédit Agricole Kosovo. And it's important also that CD and ADI has provided also the technical assistance for KRK, and providing also board members and presidents of General Assembly. The mission of KRK, it's as the mission of mostly of MFIs, to provide the loans to the category of population which don't have access to the bank sector. KRK, in context of numbers, in the end of 2020 has 16,000 active clients with 38 million outstanding portfolio, with average outstanding loan of 2,300 euro. with 26 branches and 24/6 employees. This short presentation about KRK. And we are coming to pandemic situation. As in our country, in Kosovo, the first infected cases was in March 2020, just after the government has decided for a lockdown, and was announced by the government on 15 March. Schools and non-essential business were closed, and it was some situation very difficult for operating as MFI, considering that lockdown has closed businesses, has reduced the income, but also has some psychological effect in the population in general. Up to 26 March, we are speaking still for COVID and effects during this period. Up to March 2020, 86,000 people was infected. 1,800 people died, and 13,000 people still are active with COVID. The number of infected people is relatively high, actually also. It's above 800 infected people per day, and 10 to 15 dead people per day also. For the population, you are speaking for Kosovo with population around 2 million. The capacity of hospitals are limited and can with difficulty can treat the high number of infected people. Still is not any situation when the hospitals cannot treat the infected people, but have some worry about that. And Kosovo was the only country in Balkan which haven't received any vaccines until 26 March. But in fact, finally, some small number of vaccine was received just before a few days, some 24,000 vaccines. That is symbolic, but at least to start. In context of management of situation related to COVID-19 during 2020, was a very difficult situation to manage the institution, considering that, as mentioned before, it was not the effect, an impact of COVID in decrease of income, but it was also psychological. The people was afraid what will happen, and they have hesitate to take a loan. They hesitate to pay in order to have cash in case of illness or similar. As concerned the measures in level of KRK, from the beginning we have taken the needed measures in order to mitigate the spread of virus among the staff. Even that we have taken these measures, a number of infected people in KRK, it was relatively high, but not higher than in other MFIs or in other sectors. It was very difficult to maintain, or it was important to maintain the morale of the staff through the personal example of management, in order that the staff see that yes, has some crisis, has some difficulties for which no one can provide any prognosis how will develop and where will end. But anyway, I think that we have arrived to provide some confidence on staff that even that situation is difficult with adequate measures, we should continue to work and to provide the services for clients, and also to be careful in context of protection of staff from spread of virus. In order to manage the situation just after the starting of the crisis, weekly or bi-weekly, we have organized weekly or bi-weekly meeting with the board in order to discuss the situation and to take measures. Considering that situation was very young now, and we was obliged day per day to have a decision, any measures, how to do that, if to decrease disbursement, where to be focused more and similar. In our side, due to spread of virus, it was very important to be sure that we have some backup of staff in case that we have an infection in any branch of our staff. Due to that, we have made some reduction when we have put some people to work from houses in order to have some backup. And something that we have done also in some moment, we have decided also to do the test for COVID for all the staff. It was a little ridiculous to say we do for all the staff, but it was very interesting and has served also for the organization of work for after, considering that we have found that at the time 70 staff has already passed the COVID without knowing, and 11 people was active during the period when we have done the test, which mean after this we have some people which was, if I can say, we was sure that these people for the moment has passed the COVID and are available for work, and others we have made some routine, we have changed them to work from houses, and in general it was managed well, and we have arrived really to well cover the operation in context of repayment, but also in context of disbursement. And when I say in context of disbursement, considering that we have never stopped the disbursement. We have discussed with the board, we have said yes, disbursement on this moment contains some risk, considering that we don't know what will happen. Our opinion is that we should take some risk. The people, some of activities are continuing to work, and we consider that we should continue to support them. And the high which risk will be that we maybe can lose some more money, which is not very material, but will be a good sign to a client that yes, we will continue to disburse and we will continue the operation as before the COVID. Yes, next, please.
Yes.
Yes.
Lulzim, just to tell you that you have 10 minutes left.
Yeah, I have seen your message. Thanks.
Okay.
And as concerned the liquidity, which was in the end of previous page, during all the time in 2020, we have a good situation with as concerned the liquidity, concerning that we have enough contracted financing before COVID. And I am very thankful to lenders that no any of them has hesitated to say, no, I don't disburse a loan. All of them, they have disbursed a loan. And I was very surprised also. I can say that any of our lenders was ready and has confirmed that we are ready to provide financing in any time, which was some good commodity also for us. And yeah, we doesn't have any problem in context of paying the installments for the lenders or for the suppliers. In context of pandemic and change of mode of work, in fact, even that we have some limitation concerning that we don't have the opportunity or the possibility based on law, which is in Kosovo, to open a bank account and others. We are limited on the online and digital transaction, but we have used what it was possible to keep good contact with client and to manage the operation through sending the SMS to clients through our MIS, which it was developed during this period. And also it was done with regular contact with clients and including the clients which was in quarantined municipality, considering that in the beginning the government has decided to quarantine the one municipality or two, or where it was higher number of infected people. As concerned the management information system, yes, we have during this period made the needed modification in order to adapt the context, considering that as it was done in many countries, the central banks has a request for or has decided to ask or to order the financial institution to allow the clients the postponement or moratorium for loans during any months. In Kosovo, this it was done the moratorium or postponement for the period March to June, and the restructuration for the period June to September. We have made a good adaptation. Yes, you can go in the next slide. We have made the needed change in the software in order that we can have all needed information that the credit committee can treat all the requests for the postponement, which was a huge demand for the postponement. And as you can see in the second paragraph, 63% of our outstanding portfolio, or 500 clients, has a request from KRK to postpone the installment for any of month during March, June, or any of them for the 3 months. Around 25.5 million euro was subject of moratorium, but this outstanding portfolio, which was subject of moratorium, in the end of year, it was decreased to 13 million, which means that it was good repayments, and the process of postponement has a complete resolved in order to protect clients, to provide the opportunity that he restart his business and pay the loan. During July-September, Central Bank had decided for a second time to allow the client which don't have or have impact in the business to allow the restructuring of the loan. And in that period, it was done what was restructured 1.7 million, representing 4% of outstanding portfolio. And some good thing also which we have done during this period, we have seen that due to situation, we need more people in collection. Considering until there we have only 2 persons, we have increased to 9 persons, and I think it was a good contribution to manage the quality of portfolio, which at the end of the year it was, I can say, very similar to the previous year. And having in consideration the work which is those related to the postponement and restructuration, we have reallocated the resources from one department to other in order to cover the overload in some departments. Yes, you can go in next one. Yeah, financing and liquidity. As mentioned before, we doesn't have any problem in 2020. We have contracted financing, but we have also contracted financing also in 2020, even with a pricing which it was cheaper than before. And in 2020, total financing received, it was 10 million euro. And as mentioned, the lenders was very supportive, ready to provide a new financing, and yeah, we have really appreciate this very good approach, and very supportive. I mentioned before that CBK, due to situation and lockdown for some periods, has decided in 2 different periods to make March to June to do a postponement, and July to September the restructuring of the loans. It was also it was in the decision that the loans which are subject of postponement and restructuring, the classification remain the same as were for 15 March during the period until the new decision. The new decision of CBK was in November 2020, and starting from December 2020, enforce our all existing rules for provisioning, classification, and others. Yes, up to next. And even after application of rules as before COVID, the quality of portfolio of KRK was very good. Seen in context of impact of COVID in KRK portfolio, it was decrease of loan demand due to impact on business and government measures. The decrease towards at around 2 million. And decrease of number of clients around 700 clients, 4.2%. In end of year, we have write-off around 288,000 euro, 9,000 euro. The quality of portfolio, as mentioned, even if I am speaking of the quality portfolio after write-off, it was 1.04 par 30 and par above 30, in fact, and par 130 it was 1.4. Despite the challenge on December 2020, KRK has a profitability of 1.8 million euro, which is a good very good profitability for the year. Having in consideration also that the provisioning for the remaining portfolio was increased relatively. The only graph which I provided there is related to disbursement, and the disbursement, as can you see, was very related to pandemic situation. When the pandemic situation, it was, or the number of infected people, it was high, automatically the disbursement was decreased. Even that the disbursement has decreased, we was surprised for the good quality of portfolio and for cooperation of clients and their readiness to pay the loans on the time. Yes, please.
Okay, Luzlim, I think we really need to hurry if we want to.
Yeah. As concerning digitalization, I just mentioned something. We was limited a little from the actual law, but we have used our IT system for sending the SMS message in group in order for repayment, for any new information regarding the postponement, for restructuring and all. We have improved the online application through KRK web page, and the number of application has increased for around 10% compared to previous before COVID. And we have used also, as concerned the disbursement, also marketing through radio, TV, Facebook marketing of our services. In 2021, loan demand is increased, and actually our portfolio is increased for the 3 months for 5%, which means that the 2 million which we have lose in the 2020 already we have recovery. We have reached these 2 millions, and portfolio quality remain good, with 130 below 2% and par above 30 around 1.3 or 4, which means below 2%. And in context of our offer and in context of situation, we have reviewed this. We have proposed to our board to review our interest rate for some loan products, and the board has approved our proposition. We have decreased the interest rate in some products, and KRK continue to contract the new financing for 2021, and mostly of financing for 2021 is already contracted, which means that as concerned also financing for 2021, we are okay. Okay, I think this is more or less what I have prepared to share with you, and I will be ready to respond to any question if any. Thanks.
Thank you very much, Zim. Very interesting. And because we are running a bit out of time, we're going to fly directly from Pristina to Kampala. I'm just going to share with you this, again, a very a quick survey. And in the meantime, Disan can get prepared unless Shafi finally managed to join us. Please rush on your screen to answer the questions of the survey, and we will soon move to the next presentation. Shafi,
Adrien, I'm ready. Disan here.
Okay, perfect, excellent.
Yeah.
Okay, so these two questions again to prepare a little bit the intervention of Disan. Let's see. First question about interest revenues of Ugafode. To what extent has it decreased? And second one type of branch performed particularly well during the crisis. Let's see, what are your guess? 70% rural, okay, and almost 50% of participants consider that the interest rate decreased by 30%. I assume that's it. Okay, thank you very much for your participation. And Disan, the floor is yours.
Okay, thanks, Adrien, and thanks to the rest of the participants.
Yes, and maybe
greetings from Kampala.
Just one thing. Don't forget that if you want to listen to the English or French version, sorry, of the conference, you can switch to the French channel for live translation.
Thanks, Adrien. Greetings from Kampala and from Ugafode. I'm Disan Katawara, the digital strategist. So we can dive into the next slide. So this just provides a highlight of who is Ugafode, and it clearly indicates its establishment. And it was established in 1994. We became an MDI, that's the micro deposit taking institution, regulated by Bank of Uganda in 2011. In a map there, it indicates the Uganda's geographical location and the 19 branches, including those that we prospect to get into. We have over 114,000 savers. We do savings and loans, and then 18,561 borrowers with the $6 million of deposit and 12 of loans. And we are serving over 3,000 refugee customers. Yes, we can move to the next one. Yes, so when we look at the impact of COVID on lending, it basically was very critical to look at the group lending as a key micro lending sector. We realized that due to the restriction of the SOPs, where we had restricted movement, restricted gathering, and standards of social distancing, we had a high impact on the group lending methodology as compared to the individual lending. With the group lending, this is where we give loans to group members in terms of group guarantorship, whereby we come together and the security is basically the group guarantorship. The SOPs are the standard operating procedures issued by the government, and it restricted movement basically within the border towns. This highly affected our branches like Chotera and Intunga that are next to the border, and group meetings were banned. So it really indicated that we could not meet these groups. So as you can see in the groups, we had a high impact between April. Within the cases of disbursements, we are too low as a result of low businesses. And then you realize on the on the other side, you realize the how we had a spike in the portfolio at risk as well regarding the group lending methodology. So in a nutshell, the standard operating procedures really affected much of the group lending business because they couldn't meet, they couldn't do their business going forward. And then we've realized more recoveries of the disbursement as we tended towards the end of the year. Yes. Next one. Yes, so this just gives a quick highlight of the impact on our financial performance. When we look at the revenues, we had a decrease of the we had a decrease of our revenue by 40% due to the suspended interest. Our money transfer services reduced across the branches, with the exception of Nachivare branch. This is a new branch that we opened at this start of the year 2020, immediately before COVID, in a refugee settlement, as one of our key missions to have financial inclusion for the refugees. And the credit-rated income also reduced because of the reduction in the disbursement. On the cost side, we had high provision costs, which increased with over 200%. This was as a result of the non-performing loans. And then the high cost of staff, whereby we had over 56% of our staff not being actively working because of the lockdown. Then on the capital, we had our capital adequacy ratios dropping below the regulatory requirements due to loan loss provision. And during the lockdown, we realized 90% of our businesses were closed. This directly affected businesses in trade, with the exception of those that were in agriculture. And this affected basically trade and transport, and a few agriculture businesses were on. Yes, we can move to the next one. Yes, so regarding our branch expansion, we had a plan at the start of 2020 to expand to 3 branches, and 2 were supposed to be in a refugee settlement to support our financial inclusion for the refugees. But we focused on Nakivale, which was already opened on the 2nd of March towards the lockdown. So when the lockdown cropped in, the more focus was on this branch. We are glad to inform you that we recorded a good performance basically from this branch, because you realize within the settlement, the refugees are basically located within the camp, and the money transfers, as noted up there, had increased. We increased the number of accounts which were opening. You can look at the movement there of the graphs, cumulative, and then the deposit value. The same applied to the loan portfolio disbursement, and then the outstanding. This was because the mobility within the camp was possible, as opposed to other branches which were not in the refugee settlement. And this really boosted our performance within the COVID period. And we've continued to realize more progress within this space. And we plan to scale this through a sales center model, whereby based on the size of the camp, we realize that 1 branch might not be sufficient, for example, for the camp in Nakivale. So we plan to scale it up with the sales centers so that we can reach out to more clients. This will be supported with our digital channels. That's the remote onboarding and the agency banking, which will be typically cashless, where customers can utilize these channels through third party like mobile banking and agency banking after opening up accounts and applying for loans. So this will greatly support our mission of financial inclusion for the refugees. So this is a high level of what basically we focused on and what we did to mitigate the impact. of COVID. Key was staff and customer sensitization about SOPs, ensuring that at our branch locations, we have the sanitizers. We make sure that social distancing is maintained during COVID, and then sensitization of staff and clients. Then we had customer engagements. We did this both through broadcast SMSs to our clients. Then on social media, we kept those on social media as well engaged. And then through our call center service, where we reached out to clients to sensitize them that our branches are open. You can use our digital channels. You can use our mobile banking to access our banking services during the period, and also to share information as it came in regarding what we need to do and what we need to avoid during the COVID period. We also worked on the convenience, and this was through partnerships. We ensure that our mobile banking service was up, and we ensured we enrolled clients to that. And to date, it has over 28,000 clients enrolled onto the platform. The key other channels of Airtel and mobile money continue to serve, and as well as agency banking to get through the agents. We also executed the moratorium issued by the central bank, and this was basically through the guidelines issued by the central bank, where we offered a restructure. We sensitized clients about it and made sure that we engage them to understand their business challenges. Those which were closed were also advised to apply for moratorium. And also you realize key sectors affected like schools, which are just resuming this year, were also greatly affected. But with the moratorium, we had to make sure that this was done to mitigate the erosion of the capital. Yes. In a continuation of what we did as well, we had the key power of partnerships. We engaged key partners. This included the funders for restructure as well. Those are the lenders, and as well as those who funded some of the digital solutions to ensure that we have the mobile banking app, we have the agency banking, and the remote onboarding. We instituted a work from home for non-critical staff who continued to support business at their home, but for the critical staff that had to come to the branches, we maintained a few staff there. And then the new segment in the refugee settlement, that was key to ensure that these clients are served. As indicated above, we realized we recorded a high growth basically in the refugee space. Then within that period, we also carried out a savings campaign, basically through social media, through SMS, to ensure that clients are sensitized about saving through the digital channels. And we recorded an increase in the savings balance, especially in retail, through this. Yes, you can move to the next one. Yeah, so the key lessons learned within the COVID period to Ugafode, we had the know your customer and engagement. We realized this was key to understand the customer's business challenges, to get to understand their cash flow challenges, and then to offer and extend credit facilities to those that were still in business and they're about to complete the loans. And then for those that needed a restructure based on the current situation of the business, the moratorium, that one I've mentioned, which was key for the clients. And then we realized certain sectors were moderately affected, like the agriculture, basically those which were directly involved into production of food stuff. The markets for agricultural products remained open. And then the digital channels are critical into ensuring that customers continue to access the services. We had our mobile banking where clients could continue to access their savings through the channel. And then we had other we had the SMS platforms to ensure that we engage, and then the social media. This, we realized a higher attraction on the channels, and then the adjustment of policies and procedures, such as to have the work from home policies, which we presented to the board and we got approval. And then engagement of partnerships. This was through fintechs to ensure that digital solutions come in place, and continuous engagement of stakeholders. This we did with the board by our bi-weekly meetings with the board to give them an update on where we are, what are the challenges, and how we plan to engage them, engaging our funders about our obligations, and then our clients, sensitizing them of the obligations, and then the moratorium, advising them on the impact and understanding their businesses better. And this, as I've indicated, we realized a growth in our savings during the lockdown, especially in those clients who speculated that probably they can earn some margins on the savings volume, on the savings balance. So basically that was the key. Those were the key highlights from Ugafode, based on how we addressed the COVID pandemic and how we kept the institution operating, and how we engaged the various stakeholders and the customers during the period and after the COVID pandemic. So we hope for the best as business normalize within 2021 to perform more better than what we expect, and then to expand more within our refugee settlement.
Thank you very much, Disan, and thank you also for jumping in the last moment to substitute Shafi. Thank you very much.
You're welcome.
And we can now move to the question and answer session. Priscilla, if you want to.
Hello, everyone. I will take over. Thanks, everyone. Thank you, everybody. So we have 10 minutes. Maybe we'll have 5 more minutes to let everyone answer the different questions. Some questions have been answered directly, but maybe I'll go back to Maxime to wake you up a little bit. No, joking. The one question was on the market study. What markets did it cover? And probably the question is to know if it's quite representative as a panel of institutions. So this is for you, Maxime. For Lulzim, there was a question on what had been the consequences of your managerial decisions regarding the quality of the portfolio. Another question on MIS. Sorry, I didn't really understand the point, but I see that you would like to mention something on the MIS and how you would send the SMSs to your clients. One question which I think it was for Maxime too is, but I think it's worth for everyone actually to know if you organize some workshops with the clients to discuss the consequences of the COVID and probably how to adapt your products. And Disan, thank you very much for your presentation. I see there was an answer of who are the shareholders of Ugafode, but there were questions on the specific branch which is in the refugee location. The questions were, where did these refugees come from and how many are they in Uganda? And to understand how the COVID actually spread it out, were there many cases or deaths in these refugee camps since mobility was possible. So maybe if you can comment on this. If you're all okay, maybe we can start with Maxime and then Lulzim and then Disan.
Yes, okay.
Maxime,
so on the first question, so the foundation Grameen Crédit Agricole Foundation, where I work, only has partners, microfinance partners in Africa, Europe, and Asia. So when we first started to do survey, it did not take into account, for instance, Caribbeans and Latin America. And when we started working with ADA, which has presence in South America, it helped balance the scope of analysis, which became, yes, well spread between all regions. So we saw some trends, but still, even in a region, there can be differences regarding the COVID impact between two neighbor countries. So we had a representative scope, but still it's hard in such context to have exact information. Does that answer? Yes, yes.
I don't know, because I don't think the participants can can speak. So I hope it will have answered the question. Thank you. Maybe Lulzim, you want to comment on the questions addressed to you?
Yes, sure. The question it was, if I well understood, how the management was approached to the management of quality of portfolio. In fact, starting from first day when COVID was appearing in Kosovo, the approach, it was clear, which means focus on management of quality of portfolio. And as mentioned before, also don't stopping the disbursement of the loans, concerning that we have seen the cases when the MFIs for some moments has stopped the disbursement, which means focus it was management of quality, how we have managed. As mentioned before, we have used contact with clients through the mobile phones, but it was very useful also sending the SMS via our IT system, group message concerning related to repayments, related to postponement, related to any modification in loan offer and similar, which mean quality was managed well, I think, considering that also the loans which was provided was also done for the good clients. Even that we have impact of COVID, clients was very friendly, very, how to say, in order to pay the installments. And this has allowed also that the client also usually have different source of financing. Some remittances, some maybe some small salary in family, and after also some income from businesses. This is my answer. If any other question, I will try.
Yeah, thank you, Lulzim. No, I see that we already lost 10 participants, so I guess it would be good to ask Dizan to react to the questions on the refugees, and then if we still have some time, we can have an open question on how you all maybe surveyed or had some discussions with your clients. So Dizan, please, if you can elaborate on where the refugees came from and how did this COVID spread out or not in the camps.
Okay, Thank you for the
sorry, a last question which came up.
Yes.
If you had some engagement with fintechs.
Okay. Okay. So regarding the refugees within Nakivale, we have a population of over 1.5 million refugees, and during the COVID time, we only registered one case, and there was no death recorded. This is basically what was done is to ensure that movement of external people within the area was restricted, external going within the camp. So where they come from, we have majority coming from Congo and Rwanda. Those are the majority, although we have some other from Somalia and then Ethiopia and Burundi, but majority are Congolese and then Rwandese. So that's basically for the refugees. For the fintechs, we've reached out to basically keep partners like the agency banking, the shared agency banking platform, and commercial banks, because as an MDI, we are restricted by Bank of Uganda to do agency. So we've done partnerships with them, and we are currently, we've already completed the testing of the agency banking to the clients. We are also engaging more fintechs like the service providers of mobile on how to see that we can enhance the platforms to serve clients not only for transaction, but how we can enhance the platforms to make sure that they meet the customer needs.
Okay, thank you very much.
Welcome.
Does anyone, from the three of you, anyone wants to comment on how maybe you connected with your clients directly, organizing workshops or any other kind of survey to adapt during this crisis? Does anyone want to comment on this?
Okay, from the Ugafode side, we had planned, we always do financial literacy for the clients, but this was greatly affected because we could not do gatherings. So we resorted basically to digital sensitization, as I said, through SMS broadcasts, like our peers in Afghanistan, and then as well as ensuring that at least we use the call center. That was the call center where we reach out to clients. Call center officers reach out to clients, inform them about COVID, and then make sure that they get any feedback on how they are doing, reminding them of their loan obligation, and also encouraging them to save. So those were the basic one. We also, let alone when the restriction was a little lifted, that was around September, we partnered with the Eco Credit and did some digital trainings for the smallholder farmers on how to use these digital platforms. And we were able to train over 300 participants. So this was basically as a follow-up side that we realized it's the way to go to use digital, but we realized some had challenges on how to adopt to it. So we are able to achieve that through smaller numbers and ensuring social distancing is maintained after the partial lifting of the COVID restrictions.
Thank you very much. Last question maybe, because again, I see the number of participants decreasing rapidly, but still one interesting question of Fatou about which you might see, but following the COVID crisis, which was not expected, have your respective institutions set up or plan to set up a new crisis management mechanism? Nunzim or Dizan, if you want to answer this question.
When you say management mechanism, you mean?
I guess it's management for a process where you will have a way of managing the crisis. What are the lessons learned on how you adapted to answer to this specific crisis and what happens if there's a new crisis,
Yes,
unexpected
sure.
crisis?
From the beginning, we have created some committee in which I am the president of committee, which deal with all issues which are specific and not usual in terms of protection, organization, and measures in order to avoid that, for example, that majority of management is infected by COVID. In fact, many of them already are infected, but we have taken the measures to be in 2 different offices, and we have divided in some way that if we have spread of virus more in one part of the office, we have as backup the other part. And also in the beginning, we have used also that some of people crucial from IT department, from finance, from for example, human resource, or we have at least 1 person working from home, considering that if something don't go well, we have backup. Yeah, I don't know if I have provided
Yes,
the answer in all your questions.
Some of the some elements will answer some questions.
And similarly from Ugafode, what we did, we had to set up a COVID response list committee at management level that was meeting on a weekly basis, composed of members of senior management, HR, spearheaded by risk and business growth, and then on the board that used to report on a bi-weekly. So the management committee could meet on a weekly basis to assess the impact, the risks envisaged, and these were discussed by board subcommittee every after 2 weeks.
That's clear.
Okay.
Thank you very much.
Okay, thank you very much to all for your answers. I think we have reached the end of the conference. Thank you everyone for your participation. Thank you more specifically to the panelists, the 3 of you. Thank you as well, Priscilla, and I say
the translators.
yeah, and to the translators as well, but I don't see them, so I forgot.
No,
but of course, yes. They must be exhausted by now. Thank you very much for the translation as well, and well, see you soon in the next conference from the Club of Paris. We will surely let you know soon about the next topic, and you will receive the invitation, and you will also receive the recording of this webinar. Thank you. Thank you all. Bye-bye.
Thank you.
Thanks for invitation. Have a nice evening. See you.
Bye. See you.
Thank you.
Bye.
Bye-bye.